Gold is at a 6-month high right now. What I would like to mention, what I would like to note, is that while they're talking about the price fluctuating up and down, that isn't the gold as in the physical metal. They're talking about the paper asset. And while the paper asset is probably better than many of the stocks out there, all of the bonds, the government bonds, it is not the real metal. And that's what it comes down to. They can manipulate the price of this paper, the futures market, but ultimately the real metal itself has never been in higher demand now. The demand never went away, and I'm going to show you what that's all about. Global consumer demand for gold at unprecedented levels in 2013. And they're talking about China being the world's largest gold market in 2013 as well. So, what happened here? This is the World Gold Council. You can actually sign up to them and they send you a quarterly report. And essentially, what they said is 2013 was the biggest year yet. Yet, look at the price of gold in 2013 was really not something to be proud of if you're put all your money into that gold. But what does it really mean? It means that the futures markets are getting shaken out. A lot of people are going to step out of there and they're not really going to put their money back in. They see the physical metal, or they're going to go the total opposite direction and they're going to pump their money into the stock market for it to be eventually engulfed into flames. So we have other things that I just mentioned. So the China actually surpassed India in the amount of gold that they consumed, and that is a first ever as far as I'm aware. It's official. China consumed, mined, and imported the most gold ever in 2013. So China is really taking off. Many of these people are seeing the gold as a currency, putting their money into that. They're also buying it for jewelry and other consumables. So it does get used up in that sort of way. And this is something to think about now. This brings me to my next point. Are we at a high right now in the stock market, and gold is at significantly lower levels than it was at its peak at 1923, I believe it peaked out at. But I would like to suggest to you that when you actually adjust for inflation, and this chart here is adjusted for the CPI, which we all know is phony, but let's just go with that. Even at those levels, the stock market is still down 20% over those years. So when they say we're at new highs, we are not. And that's even using the fake inflation rate. So when you add up with the real inflation rate, we have a long way to go. And we also have a long way to go for the gold and silver. Now, I'm not suggesting that gold and silver will go any higher. It may not reach any higher than it is today. But I just want to point out the fact that the media will demonize gold and silver at the same time they try to make their paper investments look better. And why do they do that? Because the pension funds, the 401ks, RSPs, all the major hedge funds, they are all riding on these paper investments. They need it to happen. Whether or not you're into gold or silver, you got to know that real assets are the way to go. You don't definitely, I'm going to say it right now, you do not want to put all your money into one thing, whether that's real estate or gold or paper investment, no matter what it is, never ever into one thing. So, what am I talking about next? We need to show you that the stock market and interest rates are inversely proportional. The interest rates are declined all the way down to zero. You can get a mortgage for practically zero. And of course, the stock market can have a little boost there, but that only lasts so long. It doesn't really work like that. And again, a bull market, any bull market, this was for the dot-com boom. This is could be for the gold and silver precious metals bull market that we could see in the future. Stage one, nobody's interested, nobody's talking about it. It's a very slow rise. It is not in the news. As I said, nobody's talking about it. Stage 2 starts to pick up, and a few of the bigger investors are getting into it. A lot of the smaller investors, it starts to pick up. People are talking, but it's stage 3 where the action happens and it curves up extremely quickly, and people need to watch out as it's on fire at this point. This is, of course, these two diagrams were from my book. And essentially, this is what we have to watch out for the 3 stages of the bull market. Once you get to stage 3, it is danger zone. I don't think that it's the case for gold. I do see that potentially not hitting what they're saying in terms of how it relates to the dollars you own now. They're suggesting 50,000, 10,000. I really don't think it will go that way. I think it will be essentially infinity because the US dollar will be worthless. But what it actually will buy you, only time will tell. I believe that everyone should own a wide array of commodities, a wide array of different real assets. So you need those real estate, you need the precious metals, you need storable food, you need skills, handy skills, you need all kinds of different things that are real because this future is uncertain. I do not know where the price of gold is going to be at, nor do I care, because I want to know that I'm putting my money into something that is real. That's all that matters. You put your money into something real because whatever happens on the other side, what is real will have value. What is fiat will be worthless. And I'll leave you guys with that. If you guys want to get onto the Money GPS Insiders, that's where I can extend more information out to you. I can give you the truth. I can do things that I cannot do on the YouTube channel. And I hope you all will join the others on there. Take care.